A lot of traders can draw support and resistance on a chart, but far fewer really understand what is happening behind the scenes. Why does price bounce at support? Why does it get rejected at resistance? And why do these zones keep showing up over and over? So in this video, I'm going to break down why support and resistance actually works, what's happening behind those lines on the chart, and why understanding this can really completely change the way you trade. So in this video, we're going to talk about why markets remember certain prices, how order clusters happen around support and resistance, and why trader psychology and self-fulfilling behavior really matter. So support and resistance, they are not random lines. These are zones where price tends to react because of trader behavior, liquidity in the market, and order flow. So let's jump right into it, and we're going to actually look at some charts to go over these examples. So the first thing to consider is that markets remember important prices. So we can start by looking at a chart, looking left, finding areas where price was previously rejected, where it previously bounced, and just know that the market is going to remember some of those key prices. And we want to think of these as zones, not particular exact lines. So if we jump over to the chart, there's three examples here that clearly show that the market remembers some prior important prices. So the first stock that we're looking at here is Roblox, and we can see that in the fall of 2025, we ran up to this area and we hit an area where we would call this resistance, where selling pressure came in and the stock has basically been sold off. So if we take this high point and we just look left, we can see that in the past, this particular stock had a previous all-time high right around the 140 mark. So the market knows this, and when price runs up to this level in the present time, this is an important level. A lot of selling pressure in the past. The market remembers this 140 zone, and it's a key area where price is likely to react again. If we look at another example, currently, at the time of recording this, NET has really been having trouble breaking through this sort of 220 zone. It's clearly a resistance zone. The market remembers this. And if we look left on this particular chart, that's a previous all-time high back before the bear market. So this area is an important price for this stock. It's an important resistance zone. And it means that there is a lot of selling pressure potentially at this zone. So we would not call this zone support. We would call this zone resistance based on some previous price history. And another good one here is a stock called HBAN. Here we can see that price ran down in March 26 into this zone here, which was actually just a higher low from this previous area. And if we look left on the chart for this particular one, we can see that it's an important price that the market remembers. It was a previous support here. It was support here. It was resistance flipped to support here. It was previous support or resistance here. It was resistance in and around this zone in 2023. It was an important price through this time. And then it was even resistance back here in 2019. And it was some resistance that flipped to support in 2018 as well. So an important price in the history of this chart, and an area where buyers have stepped in before. What was once resistance has been flipped to support many times. So one area right here, just looking at the history of the price of a stock, can help us identify key prices that the market remembers. Now, the other thing that is happening around what is called support and resistance zones is orders cluster in these areas that are obvious. So traders place buy orders near support, and traders place sell orders near resistance. And when there are lots of these in areas, the reaction is quite strong. So if we kind of look at a price chart and we can kind of look at what's happening here, this is a stock called Iron. This is the weekly chart, and we can see Iron had a monster run up since the tariff situation in April 2025, and it ran up right into this area around $70. So this area we would label as a resistance zone. So what is actually happening in this area? Well, if we put on some technical tools, we have a fib level So the 1.272 at 69.72. So that's a fib extension where price is underneath that, an area where traders are going to potentially sell in this zone. And we also have a Gann square marking market symmetry in and around this zone. And you can clearly see the price has reacted in this area. So what happens in this area is there are a lot of sellers in this zone. The resistance zone, there's selling pressure. So it could have been people who basically have bought low and they're taking profits at what has been labeled as a resistance zone. So buyers before are taking profits in this area. They might set up a automatic sell order for as soon as price touches this fib level. There may be traders that are waiting to see how the stock reacts, and they see some high wicks here. They see some selling pressure. They're going to take profits at the resistance zone. There may be short sellers that have identified this zone as resistance, and as soon as the stock enters this area, they basically place some short sale orders. So this is a resistance zone on the charts, and there's a lot of sell orders that are all clustered here, and there's a lot of selling pressure, and the stock gets sold off. Now, if we think of the opposite in terms of support, we can look at this Tesla chart and we can see wherever Tesla bottomed in and around 2023, January, in and around March 24, this area, we bottomed and went up. Back in April and March 2025, we bottomed and went up. So these are areas where there's a lot of buying orders all clustered in these area. And one technical tool that shows us really good support and resistance for Tesla is this Gann square. So we can see price came down and touched this Gann square here for market symmetry. It was in this zone in March 2024, April 2025, and currently it's in another support zone where the probability that buyers step in is high. So what type of orders are clustered in support zones? Well, they are potentially people that may have sold resistance up here and they're waiting to buy back support in this area. People may have shorted Tesla up at resistance here in the high 400s, and now price is reacting here. They need to cover their short positions, meaning they need to buy back their stock after it's reacting well in this zone. There may be people that are just identifying and wanting to accumulate Tesla in these support zones. So there are buy limit orders. There are orders from people who sold or rebuying back in. People are covering their short positions. So in these support zones, there are clusters of buy orders. That is why we want to buy support with other buyers, and we don't want to buy resistance where there are other sellers. So on a chart, you can label support and resistance with technical tools, but just understand that behind the scenes, there are many orders that are clustered in those areas, and the more orders that are there triggers a stronger response in those zones. Now, the other thing to consider with why support and resistance works is that it partly works because traders believe that it works. So there's this self-fulfilling prophecy. Many traders are watching the same levels. There's a shared behavior that creates reaction. And then the market, doesn't need every trader to react in these zones. It just needs enough traders to buy or sell certain technical tools for the price to react. So, a lot of beginners think that technical analysis has to be very complicated. In many cases, simple levels work because so many traders are focused on that same area, and there's that self-fulfilling prophecy. So support and resistance work partly because people believe it works. So if we just look at another chart, SoFi, we can kind of look at some of the same concepts that we've been talking about. Previous resistance for SoFi in the past was in the mid-20s area. SoFi was never really able to flip that zone for completely support. So other selling pressure is going to be in this area, this high 20s, based on previous selling pressure in the past. What was previous support here was an important zone where orders got clustered in here. And in the present day, this is a demand zone that looks to be getting bought up presently. Previous support and resistance, price reacted in this zone, and price came right back down to this zone, this demand zone in April 2025. And if we just hide some of these demand zone boxes, and we've just put on some other simple tools that a trader is going to look at, like a fib retracement tool, we can see when we take this fib from this high to this low, these zones, many traders are watching. So there's a fib at the 236. Many traders notice this and will place buy orders around here, and support is holding. The 702 is an important area. When price runs up here, there's going to be a lot of selling pressure. Things got sold off, and during the tariffs, we ran down and perfectly back tested the 382. People are watching at this fib level, this previous all-time high from 28.26. There's a lot of selling pressure up here. People might be shorting the stock. People might be taking profits in previous all-time high. So there's selling pressure here. And then back in the present time, there's a fib, there's a previous resistance. There's potentially more buying orders getting clustered in and around $14, $15 for SoFi at the moment. So we don't want to buy support. We don't want to buy resistance. We want to buy support where other buyers are stepping in. Now, one other quick point is that it's just not you and I and retail traders who are looking at support and resistance. Liquidity and institutions, they add weight to these zones. So these zones are not only important because small traders like us are drawing lines on the charts. Institutions, they don't ignore support and resistance. They actually use them as well. Big institutions are using technical analysis to spot these zones where there's going to be a lot of buy and sell orders, where they can also place those orders in as well. So this is why the rule that we follow on this strategy, on this channel, with the strategy that we talk about, is that we only want to buy support. We never want to buy resistance. And part of that is based on why support and resistance holds, why some of the reasons that we went over. So we want to ask ourselves the questions of, in terms of making trades, is price approaching support or is it entering near resistance? If price is near resistance, understand that there's going to be a lot of selling pressure in those areas. Why would you buy when others are going to step in and overwhelm that area with selling? We want to enter where more buyers are also going to step in, where the momentum is going to shift, and when the price is going to rise. So the practical takeaway here is that if you buy at resistance, you're often entering where others are taking profits, selling, or exiting. If you buy at support, you are usually entering where buyers are more likely to also step in. So these are high probability zones, but again, they are not certainties. But the rule that we follow is we want to buy support and we want to be cautious at resistance. So just to recap this video, support and resistance, they actually work because markets remember key prices. Traders cluster orders at obvious levels on the chart. Group behavior reinforces all this action. Institutions, they use these zones as well. And then psychology shifts at these levels. People become less fearful and more optimistic at support, and more buyers come in. And that is why prices tend to bounce at support, why price gets rejected at resistance, and why things actually move quickly when there is some momentum in these areas and certain areas break or hold. And again, that's exactly why this rule matters that we follow. We only buy support, we never buy resistance. So if you'd like to learn more about the strategy that we use and how you can actually use some technical tools to find support, find resistance on the chart, and actually make some low stress entries, then the first link below this video, you can come and find our community on School. We have a classroom section where we have a full momentum trading course that's absolutely free, that goes over the strategy, it goes over the technical tools, there's modules, there's lessons, and we do a weekly call every week. You can come to the community for free, ask questions, get feedback on charts, and everything like that. So I hope that you found this useful, and I look forward to talking with you in the community.